Hi, I'm Bobby Gomez.
And I'm Kara Murphy, and this is Money with Murphy. So as we get further into this election year, we're seeing the number of unprecedented events really pile up.
Oh, definitely we are. This is the first time we're seeing two former presidents run against each other.
And the first time a former president has been convicted of a felony. Although, fun fact, not the first felon to ever run for president. That distinction belongs to Eugene Debs, who in 1920, from his jail cell, won 1 million votes.
That's incredible.
Who knew?
Yeah, that's incredible.
Yeah, also the first time that the child of a sitting president is being prosecuted. So that prosecution is starting this week, actually.
So with all of these unprecedented events and all of these headlines mounting, Kara, can you talk to us a little bit about what we should be focused on, or what are some of the key takeaways here?
Ultimately, this trial, the one that has just ended, the one that's just about to begin, will likely have very little impact on the outcome of the election. So a recent poll suggested that 75% of independent voters did not expect the outcome of the Trump trial to influence their vote. Similarly, we tend to see that outcomes of elections have very little impact on the direction of the market overall.
So that just reaffirms everything that you've said before, which is the elections have very little impact on the market. But I do know, people have feelings around the elections.
There are a lot of feelings.
Yeah. So, talk a little bit about not just the feelings, but how it changes their behavior.
Yeah, and I think this is so important. So markets are always driven by financial facts and combined with feelings.
Yeah.
Feelings have a very big impact on what people do and on ultimately what happens. And in fact, when we look at data, there is a very clear and direct correlation between how people vote and how they feel about the economy. So if you look back, for instance, to the Reagan administration, Republicans reported feeling much, much better about the economy than Democrats. And you see this pattern replicated over decades. And, when Obama was president, it was the reverse. So there's a very clear correlation between how people feel about their political leader and how they feel about their economic situation. So similarly, how you're voting also will probably influence how you describe today's economy. Okay. So if you look at Biden's sort of track record as president, we can take any number of economic indicators. So let's talk about inflation, where inflation today is higher than what we've seen historically, but it's way, way lower than it was just a couple of years ago. Similarly, labor. The unemployment rate is very low compared to historical standards, but is higher than where it was a couple of years ago. So depending on what that lens is, you're going to tell that story very differently. And our job, right, is to help investors make good decisions, to protect their wealth, to grow their wealth over time, regardless of what's happening in the political sphere.
So tell me a little bit about some of the patterns that you're seeing.
So, and as I mentioned, the election rarely impacts the direction of the market, but it can influence, as you said, some of these patterns. So when we look at returns in an election year and we compare them to all non-election years, what we find is that returns are pretty much the same. So if you just look for the whole period of time, you're going to have a similar return. But in an election year, in the early part of the year, returns tend to underperform. And by the second half of the year, the market tends to catch up with its regular performance. Now, we do tend to see a fair amount of volatility in the late summer as we get much closer to the election. So it does mean that investors should be ready to ride it out, but might need to put on their seatbelts.
Got it. And that's why we have seatbelts, people.
Yes.
So tell me a little bit about what you're doing. What is your strategy?
So my own personal protection strategy is to turn off the TV. Now, I know I appear on TV to talk about markets, but when it comes to politics, I turn off the TV. And when I do need to read about something important, I have multiple different sources, and I go to the data, I chart it out, and I really get to understand it from as dispassionate a place as I can. Okay. So in summary, turn the TV off. Yes.
Right?
Yes. Except when I'm on.
Except for when you're on. Read a lot.
Yes.
And then become Excel pros.
Yeah, obviously.
So those three, right. Yeah. That's all you need to do.
Yeah.
Okay.
Yeah, for sure.
So perfect. And I appreciate the conversation. So invest wisely.
And live richly.